Hey, everybody. Welcome to Earnings Call. I'm Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. And if you don't know about Earnings Call and our show and what we do here is we talk about stocks and earnings, and we do it in a way that we're going to make money off of these earnings announcements. Okay. So we touch on various stocks each week that have earnings, and we talk about what strategies to use and kind of how much the stock is we think it's going to move or what the market is telling us these stocks are going to move. Last week, our trade on Walgreens Boots Alliance did really well. You're going to want to stay tuned and find out how that stock moved last week on Friday. And then this week, we're back to earnings season. JP Morgan, well, they think they lead us off. They don't, but they are always the first week of earnings season, as well as all the other financials. Most of all the other financials, including Goldman Sachs, Morgan Stanley, Bank of America, State Street, Regions Bank, I think Ozark Bank, a bunch of others, or Bank of the Ozark, sorry. A bunch of others all have earnings this week. So it's a big week for financials. These could be big market movers. So you want to stay with us and stay tuned. Let's get going. All right, so each and every week we do talk about many stocks. So you're going to want to focus on the chapter feature if you want to rehash a stock that we've talked about or that we touch on each and every week. So be sure to use that chapter feature at the bottom of the video. And let's get into that. Let's take a look at earnings this week. As I mentioned, it is the beginning of earnings season, so we are a little light, especially on the breakout stocks. There are some market movers. I'm actually going to talk about one that's not listed here towards the end of the show. So you'll want to stay tuned for that because they already declared. And then the focus here is going to be on the quiet side of the ledger here. Okay, all the banks. All right. So even though these could be big market movers, these tend not to move very much. All right. So let's focus on these quiet stocks. How do we trade these? All right, so let me pull up a chart here on how these stocks kind of move. This is a good example of a quiet stock. This is Yum Brands, and you can see that even though this stock does move around, it's just moving in a sideways range. This is Yum Brands, and you can see around its earnings announcements, which are highlighted by the ellipse and the vertical red line, that this stock just does not move very much. Okay, we're talking single digits, okay, 3%, 5%, 6%. You might think, well, that's a good move. Well, not compared to our breakout stocks, which I'll show you in just a moment. All right, so let's zero in on this list of quiet stocks. And I want to begin with KB Home because KB Home was on our show last week and we did talk about it. Okay, but these earnings dates are fluid at times. Sometimes a company will announce the earnings date, but then they'll adjust it. They'll adjust the date for one of many reasons. And I think that's kind of what happened with KB Home. It came up on every resource as having earnings last week, and then all of a sudden, boop, it moved and popped up. And they do have earnings today after market close. Let's go to the chart and we'll take another look at KB Home. You can see that the estimated move here is less than 5%. This stock does have earnings after market close today. And so with this type of movement, and as it relates to making money on the stock, we're dealing with options, okay? We're trading options on these stocks, and we are looking at selling premium. So what does a selling premium strategy look like? Well, we're talking iron condors, butterflies, strategies like that, option strategies like that. We don't ever sell naked options, meaning sell a call, sell a put, and just go with that because that takes up way too much buying power and is very risky. So we'll always do a hedge strategy, such as an iron condor or butterfly, something like that. That's how we make money in these types of stocks. And you'll want to stick around for later, and I'll show you an example of that today. So KB Home, less than a 5% move. Now we go to our headliner this week. It really is JP Morgan. Okay, they have earnings on Wednesday. The estimated move here is less than 5%. And you can see I kept the last earnings announcement indicator in here because everybody kind of looks towards these gaps. That's not the earnings announcement. That's another announcement. But this big candle here was a move of 4.44%. Okay, so that was less than the 5% move. And that's what we expect this time as well. Okay, JP Morgan is just one of those companies that's just so big, it's really hard to move around. Okay, moving on, we have Citigroup. All right, so Citi with, again, a classic symbol, one letter symbol, been around forever. All right, so this stock will have earnings on Wednesday, January 15th as well, before market open. See, a lot of these banks are going to do Wednesday and Thursday. Okay, and Wednesday before market open is one of those key moments that we have this week. The expected move here is less than 4%. And you can see, again, this is not the earnings event back here. All right. This was something else that affected the financials. Okay. In fact, let's look at the date. Oh, yeah. Election day, January 6th. How about that? All right. So you're going to see that on most of the financials. All right. And you see that this stock just pretty much trends sideways a lot. It just doesn't move very much. So we expect to move less than 5% there. All right, moving on to Goldman Sachs. Okay, this is a $500 stock, but you can still trade a nice, say, iron condor on it. Once again, the move last time was it almost unch. We use that term to indicate no movement at all. It closed down by only 7 basis points on the day. A little bit of volatility during the day, but the expected move was less than 3%. Market makers right now are pricing in an expected move of less than 4% for Goldman Sachs. And that will probably be the case again with just a big company like this, a little bit of a move. So Goldman has their earnings again Wednesday, January 15th, before market open, same time as JP Morgan and Citigroup. Goldman Sachs has their earnings on Wednesday. Moving on to Thursday, okay, we have Morgan Stanley. All right, we have earnings here on Thursday, January 16th, before market open. All right, the expected move here is 5%. And once again, you'll notice the gap here in all the financials on that date, January 6th, okay, is that date. So Bank of America, let's take a look at there. Yep, that gap on January 6th. But as it relates to earnings, what we're going to see here on Bank of America, again, Thursday, January 16th, before market open, expected move. Okay, what the market makers are kind of predicting right now is a move of less than 5%. So again, condor or iron condor is ideal. Sometimes butterflies in certain situations, but these are the types of strategies that we would do here. Okay, now last on our list of quiet stocks, I'll get away from the banks and I'll talk about Schlumberger here for just a moment. Totally different group, but again, a quiet stock going into earnings. Now, this stock will declare Friday morning before market open. That's the 17th of January. The expected move is less than 5%. So you can see that many of these stocks have low single-digit moves. Okay, I think that maybe Morgan Stanley was the one with the great potential move. Oh, it was 5%. So we're really coming in at 5% or less on all of these quiet stocks this week. These are ideal for a sideways trending type of option strategy. Okay, so let's move on to our breakout stocks. And let me show you what a breakout stock looks like. All right, now this is an example of Shopify, all right, and which is one of our regular regular candidates for a breakout strategy. And you can see this around the earnings events, which are highlighted with the ellipse. You have these big gaps. in the stock. And we're talking double digits, anything more than 10%. We're looking for that type of move around the earnings event. So these we call our breakout stocks, and they have sometimes big moves. And I'll show you an example of that. Another example that just happened this morning here in just a moment. All right, so stick with us. But let's begin and look at our list of candidates. We have AIR. AEHR is the symbol here, Air Test Systems. All right. Now, if we look at, and then we have Calavo, one of the two. All right. So let's look at the charts here, and we'll begin with AIR. We have earnings today after market close. All right. The stock will, the estimated move here is greater than 15%. For AIR, and this is a $15 stock. So the good news is here with this type of strategy, we use straddles and strangles. The good news is that this is simply buying a call and buying a put simultaneously, same stock, same expiration date, and you're looking for a move either up or down. But here, it's all about pricing. Okay. So sometimes the market makers will price in a move bigger than what the estimated move is or what the average move is. So they're saying the estimated move is going to be bigger than the average move. And sometimes this is a challenge with these types of stocks. But if the pricing is there, okay, if you're getting a discount on the pricing, meaning the pricing is showing, say, an 8% move, but then historically, say it's a 15% mover, that's a good indication that you have a winning potential trade on your hands. But for AIR here, we're looking at earnings today after market close and a move greater than 15%. So another one that I want to highlight here is Calavo. Okay. This is with earnings on Tuesday, January 14th, after market close. The expected move here is greater than 15%. Actually, need to change that because that should be greater than, not less than. So let's see here. Let me just do that so we have that correct indicator there. So greater than 15% around earnings. And again, being a $23 stock for this, and then AIR being a $15 stock, you're going to be looking at your straddles and strangles costing around $1,000, $1,500. Now, you might think that is quite a bit of money, but considering that if you're looking at, say, a stock like Goldman and you're wanting to trade a straddle or strangle on there, you would be looking at $5,000, $6,000, $5,000 to $6,000 for that stock, maybe even more with some of these. So sometimes when you get up in that $200-$300 stock price range, it's hard to trade straddles and strangles on those. When you have a smaller trading account, you really need a bigger trading account. But for these, that's why I like these. $15 stock on one, $23 stock on another. All right. And you're in good shape. Now, two stocks that I don't have on my list this week. And again, I'm relying on data, pulling in information and processing information. I didn't get these on the sheet, but I wanted to get them on the show. Concentrics here will have earnings on Wednesday, and this is a breakout stock. Okay. As you can see, the last time this was at $65 and it gapped down and opened at $51. Okay. So from 65 to 51, that's a big move. And we're expecting that once again here on Concentrics. They have earnings Wednesday after market close. Okay. The estimated move is greater than 14%. Now, the stock that I was talking about that had earnings this morning, okay, and it really didn't set up for us, okay, again, because the pricing of the options was too much for the potential move, but it did yield a very nice move, was Moderna, okay? And this stock is down 20% this morning on the earnings announcement. This is the type of stock that we're looking for if the pricing is right, okay? And so Moderna was pricing in a move of around 19-20%. And so there really wasn't an edge there at the time. And again, with earnings this morning, then you had the weekend of theta decay. It just didn't make sense to trade Moderna. So it did not make our list for this week. But this is an example of a breakout stock, big double digits, 20% mover. And to think that this stock was, look at that, $175 in June of last year. And it now is trading at $33. What amazing downward move for the stock. So that's an example of a breakout stock. All right. Nice big moves around earnings. Okay, with that, let's get to our trade for last week. Let's take a look at what we talked about. Now, if you are liking what we are doing here, be sure and like and subscribe to our channel because we talk about these stocks each and every week. Last week was Walgreens Boots Alliance. We talked about it right here. I like the stock. It's a $10 stock, which is kind of on the lower end of our range. Where we like the trade was looking at this. The trade was about 150 some odd dollars per straddle. Okay, we did a straddle on Walgreens Boots Alliance. On a $10 stock, that's about, like I said, about the lowest we go, and you want your straddle or your strangle to be in that $150, $200 range, no more than that. And so we got good value here on Walgreens Boots Alliance. They ended up having earnings on Friday morning. And let's see what happened here. The stock actually moved up nicely, moved up 27% on the day, moved up even higher, about 29% before pulling back just a little bit. And we took profits after that market high there, and the stock started pulling back, which generated a nice return of 52% return in just 4 days. 4 days of holding on to a position, and you can make upwards of 50% on your money. Is just, boy, no other place than options can you do that. The profit was $262 based upon the number of contracts we did. Again, that's per straddle. So amazing work for Walgreens, amazing trade for Walgreens as the stock just exploded on their earnings result, closing up 27.5%. All right. So that's great for these breakout stock. And the good news is that we, as I mentioned, are just beginning the next round of earnings and earnings season. So as we go into it, let's take a look at our trade of the week this week. Again, we're focused on the financials, and what we're looking at is Goldman Sachs. All right. We're going to look at an iron condor on Goldman Sachs. The credit we're going to get about on this is approximately around $132 per iron condor that we do. Now, that might not seem like a lot of money, but that's actually per spread. And we base our strategies on a hypothetical $10,000 trading account for these types of trades. And so if this is successful, that is a 1.3% return on portfolio in just 4 days. Okay. These options I would look at using either this Friday or a week from Friday expiration. The iron condor involves selling a call spread and also selling a put spread underneath. Okay, you do those together. It's a 4-legged trade. You combine those credits together and you get your max return. Okay, and it also, because you're buying options on the wings, you are limiting your risk. So the return there is a very nice potential return for a stock that, again, don't mind that gap. That gap was around the presidential elections. The earnings event is where that green triangle is. And the stock actually moved 70 basis points that day. Okay. Or it closed up 70 basis points from the previous day. So our previous trade on Goldman worked out, and we are expecting something similar today. So an iron condor on Goldman Sachs. And next week, we'll take a look and see how it performs, as well as your next list of earnings candidates right here on earnings call, which we do each and every week. So everybody have a great trading week this week, and I will talk to you again next week. Take care.